Hey guys, Domenic Neshi here, and today I want to talk to you about off the plan. It has been a very contentious topic for many years, especially since 2017, the height of the property market. It has been poo-pooed, frowned upon. Many people haven't liked it for a number of valid reasons. Now, today I want to talk to you very quickly about a couple key concepts, talk to you about some of the goods and some of the bads. So let's look at some of these concepts. Now for me, off the plan, a simple thing is when you're buying a property off the plan. It doesn't exist yet. You're buying it based on some pictures, some computer generated renders, and you say, hey, that's what I want to buy. The builder, the developer go and build it, and then you go and take ownership of it sometime in the future. Now, I really distill off the plan two main concepts. One is quality and the second thing is time. Now, each of these concepts represent both a risk and a reward. We can use both of these different things. Some of the biggest issues that off the plan has had is with these two things here. One is quality. One of the biggest gripes that we've had over time is that the quality has been poor. Now, two things happens there. One, it just comes down to who's delivering it, and then also the nature of it being new. Through the 2017, through the property boom, many people came into the market, new entrants being developers and builders. And when you have a lot of new entrants, that's typically when you have some quality shortages, when you have new no-name developers, builders trying to earn their stripes, new to the industry, are making mistakes. That's when there's a lot of bad press. That's when you get the some really poor subcontractors, contractors, new cabinet makers. When there's not enough building supplies in the area, that's when new people come in, and that's when mistakes are made. So that's effectively why it got a bad name. A lot of new entrants came in. They couldn't deliver to the quality or the standard that had been done in the past. So then it got a lot of bad press, and that's when things go astray. Now, that really then makes you think, if I'm going to go into off the plan, who is it that's delivering it? Have they got a good reputable business? Have they done stuff in the past? Now, the opportunity with quality is that off the plan gives you access to brand new properties. Now, if it's done right, that means you get access to stuff that is much better than that's on the existing market. Better quality design, better quality fixtures and fittings. You get access to a certain position. So you might get height in a building, beautiful views or vistas, or get access to a market that before didn't have any stock in it. So brand new means that you've got better quality amenity. There's certain tax incentives for buying brand new, especially if it's an investment, and then also access. You get into areas or locations that previously were hard to get into. So really, when you're thinking about quality, you want to ask those questions: who's delivering it, and what am I actually going to buy? Now, that also then leads me into time. So some of the issues with off the plan is that people were promised to get a specific product, and then they don't get it because the person that was delivering it wasn't good. Or with time, that some clients are concerned because they're working with people that aren't so reputable, and if the developer's saying we're going to deliver it in 2 years and it takes 3 or 4 years, there's a time value of money as well. So they want to get the thing that they're proposed to buy. But time also represents an opportunity. Depending on when you're buying this property, what the market conditions are like, can determine whether you make a gain or you make a loss. Now let me explain this concept. If you're buying a property off the plan and you're buying it here at point 1, where it's arguably a low point in the market, where we feel like it's depressed or there is a positive future where we can see there's going to be growth in that market, then let's just assume you bought it in year 1, it's now year 3, there's going to be 10% growth. So we've used a $50,000 deposit to buy a $500,000 asset. It's been 3 years, it's grown by 10%. that property is now worth $550,000, which means that you've made a $50,000 gain on your original 50K investment, not including taxes and stamp duty and all that kind of stuff. Now, where Off the Plan got a massive, where it started losing its shine and glimmer and where it got a lot of negative press is when people bought at the peak of the market, 2017, 2018. It was the top of the market, the area was running hot, and people were buying at premium prices. The market fell by, it was actually more than 10%, but let's just say 10% in this instance. So you put your 50K deposit to buy a $500,000 asset. 3 years went by, the market dropped, that asset's now worth $450,000, so you've made a 50K loss. In this instance, it's scary because if you've bought a property off the plan, it's dropped by $50,000, you actually have to go and get an additional $50,000 to complete that transaction, or you've got to let that property, that contract lapse, and you lose your original 50K. So this is the risk, and then that's the reward. Depending on where you are in the market and where you're buying that off the plan investment can mean it's either going to be a $50,000 gain or boon, or a 50K loss in this instance. So that's where we've got to be careful with off the plans. You've got to ask yourself that question. Are we at the top of the market? Are we at the bottom of the market? And where are we? What risk do we want to take in this type of investment? Now, time can actually be used for a lot of new entrants as well. So for instance, one of the biggest difficulties for new investors or people coming into the market is getting that original deposit. A lot of people are saying 50K deposit, I don't have that. So let's just use this as a tactic. If this property is $500,000, in some instances, a developer will allow you to put in a 5% deposit as opposed to a 10%. So if you were to get in with a 5% deposit, that would mean $25K that you need to put in. In this instance, depending on when you're buying this property, it may be between 1 or 3 years to completion. So if we've got 2 or 3 years to go and save the remainder of that 5% deposit or the remainder of that 25K, by the time it completes, you should have that 10% deposit. Now that can work in a number of different ways. Maybe you've already got 10%, but you want to get more. Or you've got 10% and your current earnings capacity is, I'm earning $60,000, $70,000, $80,000, but I know I've got a promotion coming, or I'm going to be finishing some kind of degree and my income's going to go up. The point I'm trying to make here is that time can be both beneficial depending on when you're buying it in the market or how much of a deposit you have, or it can be to your detriment depending on, again, the market conditions and when you're buying that property. So for all of you that are out there looking at property investment, buying something off the plan, it's important for you to be asking those questions about time and asking questions about quality. So go out there, do your research. If you need a hand, reach out to us, but happy investing, and I hope to hear from some of you soon.